Hey guys, hope you're well. It's Alessio, and in this video we're going to talk about one of the markets we haven't talked about for some time, and that is the financial markets. So I've got something very interesting to show you guys. In a few minutes I'm going to show you a chart that many of you probably have not seen, which is a signal that hasn't happened for 19 years. I'm going to show you a signal that hasn't happened for almost 20 years. So let's talk about something here about the stock market here. Firstly, we've seen a major rally in the stock market, especially in the last few months. Actually, even I would say from October, November onwards, we've seen a major rally continue in the stock markets. But here's something that has happened on the stock market I want to show you that hasn't happened for 19 years. Let's go to the first chart. Guys, if anything has not convinced you that this is a bubble in the stock market, this probably will. This is called the Option Speculation Index. Again, this chart is courtesy of Jason Gephart of Sentiment Trader, who, by the way, is a fantastic guy. He looks at the statistics of the market over historical periods. And take a look at this, guys. Jason mentioned this recently. And so this is the Option Speculation Index, and it shows the level of options buying, essentially bullish options or call options buying, has reached an extreme record. A record not reached since 2000, the year 2000. And guys, most of you probably remember what happened in the year 2000, right? The dot-com bubble, the famous tech bubble. And as I'm sure you probably know, we know what happened after that major extreme was hit. Now, as a matter of fact, we're just about to reach that level. As a matter of fact, that red line we see just about to hit that level and potentially go above it. And you can see that, this is without a doubt, a bubble signal in the stock market. And unfortunately, as you probably know, you know what happened to the dot-com bubble back in the year 2000. We had a major, significant drop in the stock market. Now, let's just leave that for a second, guys. Now, look, I just want to make sure it's clear. I am not using this chart to tell you that I'm predicting a crash, a major, devastating crash in the stock market. No, look, some of the technicals have changed over the last few months. I'll talk to you about it in a separate video. We don't have time for it today. But I am not by any means suggesting this is going to result in a major crash. As you probably know yourself, the markets, is a famous saying that says the markets can stay irrational more than you can probably stay solvent. So remember, even though the market is extremely overbought, unfortunately, markets can stay overbought for long periods of time. We shouldn't jump to the conclusion that this signal here automatically means we're going to have a major, devastating, catastrophic crash like the one we had in the year 2000 or even back in the year 2008. What this does mean, though, you should be very careful. Let's take a look at the chart of the stock market right now, which is the next chart. We've seen this. This is the rally from, again, it's the bull market from 2009 bottom all the way to where we're at right now. Notice we've broken out of that regression channel. This is channel that I've drawn here. We've broken out to the upside of that regression channel. Here's one thing you should remember, guys, and I'm sure you already sort of have an idea about this. Actually, before I mention this, notice that we're overbought on the RSI short term and the Sigma. The Sigma is about to get overbought. It's not there yet, but the Sigma is about to enter the red zone probably soon. Here's the bottom line. We've broken to the upside of that regression channel. On the right-hand side, you can see there, we're above the blue line of the regression channel. Usually when something like that happens, statistically you see a pullback. A pullback occurs back to the mean. The mean is the middle line, the gray line. That's about the 3,000 level. So guys, I think very likely on the balance of probabilities, we would probably have a reversion back to the mean, some kind of correction, at the very minimum, I would say to 3,100. I think we're looking at a 3% to 5% correction, maybe even a bigger one back to the mean of that regression channel. Let's just leave that for a moment, guys. Bottom line is, guys, that I think that the charts, yes, this is bullish, but some of the indications like the option speculation index I just showed you, the 19-year signal that we just saw, is telling us we should be very cautious, not join the crowd. The crowd are extremely optimistic and extremely bullish. This is telling us we should be cautious because we could be expecting a reversion back to the averages, a reversion back to the mean potentially soon. And when that happens, in the next video, in a future video, I'll talk to you more about what could happen potentially next. At the moment, this is not a major crash scenario, but more of a reversion back to the mean. Thanks very much, guys. Bye for now.